Okay, good morning, everybody. Welcome to the session one, the Fintech Playbook discussion. I'm Ridzuan Aziz from Fintech Association of Malaysia, and we are lucky today to have Mr. Kuan, General Manager of Perbadanan Insurance Deposit Malaysia, or popularly known as PIDM. And we also have Encik Nizam Mohamed Nadzri, the CEO of Malaysia Debt Venture, Berhad, MDV. And you may be asking how these two organizations fit into the FinTech Playbook. So let me give you a little bit of a background in terms of what our discussion is going to be today in terms of discussing about FinTech Playbook and how MDV and PIDM is potentially can be participating and be a very important stakeholders in the FinTech Playbook. So as FinTech and innovation is developing rapidly, and there are many gaps noted. And among others is the awareness. I can say that at all levels, whether it's at the boardroom or even man on the street, still a lot of misunderstanding or misconception about what fintech is all about. And that leads to accuracy of information, certain relevant perspective, as well as creating the right action plan, especially for businesses. So it is really important to have a relevant structure in terms of how information can actually be used to facilitate cohesive and comprehensive efforts by various stakeholders in understanding and optimizing the benefit of fintech and in innovation in general. So the playbook concept that we have is to bring multiple aspects about fintech innovation anchored by five pillars. So we talk about talent, specifically looking at developing capabilities to reskill, upskill, and nurture new skills. We talk about technology. We are talking about understanding the perspective as users and innovators. That's really important. As these two bring different dimension and thereafter a different approach in terms of how you understand technology development, purpose and its implication. The third one is looking at funding. This is where we need to understand the dynamic between demand and supply. And in order to match the type, the nature, and the expectation about it. Number four, we talk about value proposition. Generally, we talk about what's in it for Malaysia and what's in it for Malaysians. And last but not least, is about the structure of how we go about. The key question that we always ask is about whether do we need to be licensed or not to be licensed by regulators. So all these is important in terms of understanding the view and get various stakeholders in looking at optimizing benefits and implication of fintech. So today we're going to discuss with MDV and the IDM about two main aspects about their organizational need for them to be digitalized and get into innovation, as well as talking about how they can work also together with the fintech industry, especially those who have great ideas in terms of how to make things better for Asia and Malaysia. Okay, enough about the background. I want to go straight to the IDM in terms of asking Mr. Lim about what's PIDM, what's their mandate, and share the background of what are you guys doing at this point of time. Over to you, Mr. Lim.
Thank you, Rizwan. Thank you, Rizwan. Thank you for this invitation. I've got a couple of slides to share. I'll put that through. I hope everybody can see. Okay. Again, thank you, Rizwan. Thank you for inviting us for this session. Good morning, ladies and gentlemen. Today, I would to provide you with a brief overview of who PRDM is and what we do. In the context of today's session, I would like to share with you our technological challenges as an organization and how we potentially may work with the many providers of IT and digital solutions to address our technological needs. Now, allow me to share a broad overview of who we are. Founded in 2005, PIDM, or the Malaysian Deposit Insurance Corporation, is an independent statutory body set up under the PIDM Act. Our primary mandate is to administer the deposit insurance system and the top insurance benefit protection system. The DIS and TIPS are funds set up within PIDM to provide protection against the loss of bank deposits and insurance benefits in the event of a bank or insurance company failure. PIDM also extensive intervention and resolution powers in the Act to undertake both going concern and gone concern resolution of our member institutions which are non-viable. In administering our deposit insurance scheme, PIDM collects funds based on a differentiated premium and levy system in accordance with the risk profile of our member institutions. So, lower risk institutions will pay lower premiums and levy rate, while high risk would pay higher premiums and levy rate. As such, this will provide incentives for sound risk management. So our members will be incentivized to better manage their risk. So through the deposit insurance scheme, PIDM provides financial protection to depositors and policyholders who have deposits or insurance benefits with member banks or insurance companies. And this therefore contributes to the stability of the financial system. Now, let me touch on the protection that we provide automatically to depositors and policyholders. PIDM currently insures up to 250,000 per depositor per member bank. And for takaful and insurance benefits, we provide protection of up to 500,000 for able insurance benefits per member insurer. With this coverage, PIDM currently insures up to 97% of depositors in full, and 99% of life insurance and family takaful, and 96% of general insurance and takaful benefits protected in full. Now, in view of our deposit insurance mandate, PIDM is one of the financial regulatory authority working alongside with both GARA as well as the Ministry of Finance to ensure financial system stability in Malaysia, right? PIDM currently has over 92, in fact, we have 92 member institutions, 42 of which are member commercial banks, and 50 are insurer members, both life and general insurance and takaful companies. These are all licensed by Bank Negara Malaysia. Apart from our function as a financial consumer protection authority to protect deposits and insurance policies of financial consumers, PIDM is also the resolution authority for member institutions. As a resolution authority, our function is to deal and resolve member institutions who are failing or who are likely to fail, so as to enable the distressed financial institutions to exit the market in an orderly manner without severe disruptions to the financial system and the economy and the general public at large. As a resolution authority, PIDM has a wide range of powers and tools to deal with troubled financial institutions. When a bank fails, PIDM, for example, take control of the institution and sell it to other viable parties or institutions. We can also transfer the assets and liabilities of the troubled institution to PIDM and manage it on our own prior to finding a buyer. And in the worst case scenario, we could also close down the institution and repay or reimburse our depositors and policyholders the insured sum. Now, let me then move on to some of the technological challenges and uses for us to undertake a effective role, right? So PIDM sees digitization as a key enabler in carrying out our mandate in a more efficient and effective manner due to the technological advancement, the element and consumer behavior changes. For example, some of the financial industry landscape changes that has evolved and are evolving includes for example, in the payment system landscape, from credit cards to debit cards, e-wallets, and now even possibly moving towards cryptocurrency in the future. So in the area of banking services, for example, we see consumer behavior demanding for more powerful applications, moving away from visiting brick and mortar bank branches to mobile banking. In fact, the mid to younger generation consumer prefers mobile banking apps with features to summarize and track cash flows and spending. So this tracking becomes valuable data to our younger generations as they want to be informed, and this app also provides convenience to them, right? As it is, PIDM is constantly scanning the environment to keep pace with the evolving digital space fueled by advancements in technology, meeting the dynamic changes in behavioral needs of financial consumers, right? Now, touching on the effective resolution scope, right? One of the key initiatives that PIDM is undertaking is to modernize the payment approach with regards to the mandate of reimbursing insured depositors in the event of a bank failure. The objective is to provide a seamless reimbursement experience to our insured depositors where payments could be automatically channeled to their alternative deposit account upon an event of a bank failure. Now, one of the challenges that we face, where and how do we seamlessly channel deposits to our insured depositors, right? Currently, we are able to extract the depositors' information from a failed bank very quickly, right? However, this information does not contain the native bank account of the depositors. As such, a solution that we are currently developing is to be able to have the capability to be linked to PayNet's retail payment platform to conduct ID proxy payments via DuitNow. For security reasons, payments will only be made via ID proxy and not mobile number proxy, right? So this is one of the payments and technological solution that we will be adopting once development is completed. With this optionality, awareness and greater adoption of ID proxy for DuitNow is also a key factor to the success of a seamless reimbursement. Now, moving forward, we are also keen to explore other payment options which would allow for seamless payment to depositors. For example, we are currently paying into alternative bank accounts. However, there are now significant growth in other stored value mechanisms, such as e-wallets and virtual payment accounts. So as such, we are constantly looking out for opportunities to offer a wider range of payment approaches and payment destinations, right? With the reimbursement function, another technological challenge that we are looking into is our ability to remotely authenticate the identity of depositors during reimbursement. This is to allow for depositors to interact and provide alternative payment instructions when interacting with our microsite. We are currently looking at proven technology to positively and securely authenticate depositors, including eKYC systems. In addition, we are also exploring solutions that would facilitate the verification of the authenticity of specific types of official documents that we may require from our insured depositors to show proof that their request is legitimate. For example, government-issued documents such as death certificates, court and legal documents such as power of attorney and letter of probate. This requires technology as well as official registers and government database to be remotely verify the authenticity of these documents. Now, let's move on to the next sector. Another significant area of digitization is our risk assessment and resolution planning, where we undertake ongoing assessment of the risk of our member institutions and our work in developing our member institutions' resolution strategies in the event that they become non-viable. In our efforts to digitize the way we undertake our function as a resolution authority, we are on the path of embracing elements of supervisory and regulatory technology in how we do things. This is also known as SupTech and ResTech. This includes using big data concepts and technology to better manage, access, and analyze the extensive data that we receive from various sources, including our member institutions, from the central bank, other safety net players, external service providers, and even social media. All these data are residing in different databases and platforms and are in different formats, whether they are structured or unstructured. So for example, we have started building our corporate data lake to integrate these different data sources and data types into a common platform. This will facilitate a one-stop integrated data platform for data storage and access to facilitate prompt and powerful data and analytics. In order to do this, we are currently considering the merits of base services for some part of our operations. This includes business analytics, as well as considerations surrounding data confidentiality and security, given the sensitive nature of data that we are dealing with. We are exploring possibilities of machine learning for unstructured data by developing semantic engines to extract and analyze information from various sources. The objective is to achieve a more efficient and comprehensive way to collect and correlate data and information for analysis. The ultimate objective is to identify patterns and predictive models for assessment of contingent impact or early warning signs of potential threat to our members and to the stability of a financial system. So our initiative in this area also includes greater automation and of our procedures and our processes, such as the adoption of an industry portal that allows for safe and secure transmission of large-size data with our member institution. This has brought about greater efficiency to our members' data submission process, resulting in reduced regulatory burden. Now, from a governance and security perspective, as we deal with a lot of confidential information, we adopt and enhance our information management framework on how this information is to be handled, and we use technology to facilitate the implementation framework. In addition, with the rise in cybersecurity threats globally, our focus is to continually improve our cybersecurity posture by adopting the National Institute of Standards and Technology best practices to secure our critical infrastructure. It is critical that we take steps to continually improve our response, resilience, and recovery capabilities. Now, I have shared a broad overview of what are some of the PIDM's technological challenge needs. I know that there are a lot to digest, so please do reach out to me separately if there are any areas of interest that you want to know more, and maybe we can explore further with this. Thank you very much.
Thank you, Mr. Lim, for that very comprehensive introduction about what PIDM is doing and the expectation. Now over to Encik Nizam to explain about MDV and your aspiration from technological and innovation aspect.
Thanks, Ridzuan. Good morning, all. It's great to be here with you on this wonderful, bright, sunny Sunday morning. Thank you again for the organizers. For MDV, actually, I do hope that the participants have heard of us. For MDV, actually, we have two distinct businesses. One is that the technology project or contract financing. Essentially, we lend based on the cash flows of a particular project. Say, for example, what some of the e-government infrastructure, where a large capital outlay is required at initial stages, and the cash flow is coming in over a period of, say, between 5 to 7 years. So that's some of the projects financed by MDV. In addition to IT, we also do green technology, primarily in renewable energy, and other strategic technologies. Since we report actually to two ministries, one is the Ministry of Finance, which governs our shareholder requirements in terms of fundraising, etc. And the other part is the Ministry of Science, governs our technology lending and credit directions. So for us, we have two distinct businesses. So for the first part, essentially, we work to provide a flexible financing package to bridge the cash inflows and the cash inflows coming in from the project, or in the case of the second business model would be lending to startups. I do understand that when we first started this in 2017, 2019, I do remember going to conferences in 2013, 2014, which does seem quite a while back. The VCs were speaking before me. Room was fully packed, and organizers introduced MDV. Malaysia, next up, we have Malaysia Debt Ventures to talk about debt financing. Half the room emptied. So there was like 4 or 5 people, which again, I'm truly grateful for their presence there. It does give me a reason to travel all the way up to Penang. But for venture debt, it's not really an entirely new concept. It's been around in the Silicon Valley for 30 years. But unlike first business model that MDV has, which is lending based on the project cash flows, this is lending based on the valuation of the companies. The other part being debt, essentially, the disbursements can be structured according to the requirements, together with the repayments. I think we met up with promoters, founders, and even some VCs at the earlier stages when we were looking at this about 4 or 5 years ago. My company is a startup. I do not have the cash flows to repay. I need all the cash flows to focus on the development of the company. So essentially, our counter to that is, I think, as the MCO point, raised this matter, brought this to the surface, is that one is that you will require, your company's CFO will need to have the various corporate finance tools. One is equity, and the other one is debt. Debt will generally be cheaper, and generally you would be expending that type of capital for some of the expenditures that perhaps generate lower returns. The other part, in terms, the other issue that was raised was in terms of repayments. I'm a startup. I need to open up offices in Penang, in Johor, or overseas for that matter. And these investments take time, basically to come back. So essentially, what we told them was, yes, we can structure the repayments to meet your requirements. We gave a moratorium period. That's interest or profit only in the case of Islamic financing, over say the first 12 months, while the project overseas is incubating and developing. Payments can start on the month 13th, and when it starts, it can be on a step-up basis. Payments can be increasing, can be structured monthly, quarterly, semi-annually. Don't try for bullet payment. It causes sleepless nights. But it can be structured for startups. So debt for startups is quite feasible. The other part of it, like I alluded to, is the MCO. We had startups that provided platforms for home renovation, for odd jobs around the house, for example. So these, obviously, these can't be done during the MCO. So what do these startups do? Cash flow is not coming in. I have my technology costs. I need to pay rental. And most of all, I need to pay for my talent. So you do need that liquidity support to cover you. It's not just the MCO, perhaps. It could be, the major deal that you're working on did not come true, but it's not coming true in Q1, but it's in Q2. So again, such liquidity support would help. So what we gave out, I think with the government, is a cash line, a revolving facility that, once things gets better, then essentially you would pay and be able to use it. But, if on by some off chance that, it is still, the situation is still pervasive, then essentially you would roll over the fund, pay the interest, and get another 6 months pension. So it's sort of like paying your minimum balance on the credit card. So so that's basically what MDV does. One, project or contract financing. The other one is lending to startups, either term loans or working capitality. The difference being between the former and the latter is that the latter will have a warrant feature where it is pegged to the amount of the facility. And this allows us to manage risk to match the risk and return, and again, to continue to make this program sustainable, to finance the Generation 2, Generation 3 of startups going forward. So that's basically MDV. But I think in our the backstage session where Cik Ridzuan promised to ask me is that we are with the venture debt fund, essentially MDV is becoming less like and more like a VC or GP or general partner, and we are looking to raise funds again to match our current funds. Actually is from a sukuk, and I do have responsibility to my sukuk holders, and we need to raise funds basically for a venture debt program. And one of those, if you've read the news, is with Kenanga and MBV is jointly managing a fund specifically for fintech, and it's the differentiation factor is that it will offer both debt and equity portion. So it can make a lot of difference as to how you structure your capital. One is that the equity and debt portion can come in together and fund various types of projects, projects that you may have on the back burner, and both can be implemented at the same time. Or essentially, the equity portion would come in, and as you grow bigger, then the debt would come in. Or, likewise, debt will come in first to finance some of the early stages, or that has perhaps revenue coming in, some of the pivoting strategies that you have currently on, and equity would come in. So that would provide, a myriad range of possibilities for the founders and promoters to think about. All right. Thank you, Ridzuan.
Thank you. I think this is a very, very informative and eye-opening. I'm taking a lot of notes in terms of basically what the IDM is doing and what MDV is doing. And I think there's a lot of new approach, new mindset and perspective that has been shared with Mr. Lim and Nizam. And both organizations, though they are government agencies, they seem to be very friendly towards making sure that various of companies, especially startup, are able to take advantage of the rapid development. And then I just want to share that startup doesn't mean that it's a new company. Startup could also mean a new initiative that could also be by a company that's pivoting or company that wants to do new things. Even if let's say you are a high learning institution, universities, if let's say you partner yourself together with the industry and come up with some initiative that has a viable business plan, I think that is something that would be considered both by PIDM and also MDV. So going straight into some of the questions that I have. So I go with MDV first in terms of when just now Mr. Lim talked about the options on reimbursement channels. Yeah, I think that's a very interesting topic because, as you know, many Malaysians, though they have a bank account, they have a bank account. So just one bank account. If that bank account fails, the next big question is, where do you pay them? Where do you pay the reimbursement, the channeling that payment? And these also talk about how do you want to do it if there's no other bank account. So perhaps Mr. Lim can share what's the plan and what's the immediate action now that's available for PIDM to address that, and perhaps some of the fintech company can listen in and take note about thinking of certain solution together as well. Yeah, over to you, Mr. Lim.
Thank you, Ridzuan. I think it's a very, very good question, right? Let me share with you some of the trends that we see in terms of where payment destinations are going towards, right? Now, from our statistics, what we see is over the past years, there have been increasing trends of the Malay population, performing a lot more banking transactions over the internet and through mobile apps, right? And for example, in 2012, what we saw is that over 15 million internet banking users. This is back in 2012. But now in 2020, we are over double that number, over 36 million users of internet banking. And also, likewise, in 2020, what we saw is the volume of transactions performed through internet banking has also now gone beyond 1.5 trillion transactions, and the value in terms of the value comes up to almost over 9 trillion ringgit. Just this is for the year 2020 alone, right? Now, these statistics shows that more and more people are embracing technology in performing their banking transactions, right? And this is also our observation that the younger generations, the one which are more IT savvy, they are more likely to use internet and also mobile banking, right? So in light of this, what we are looking at in terms of reimbursement channels, we will also have to cater for this behavioral change in this trend that we see. And what we have is we have a range of options currently, our reimbursement options, apart from the traditional payment modes that we use, which is the electronic funds transfer and also checks, right? Which of course has to go into a deposit account. We are also currently exploring for payment methods which will basically go into wallets, for example, and also possibly any other what they call online accounts possibly that we can also explore, right? Now, there's also for us is also we are looking at potentially also paying into accounts of non-bank financial institutions. Yeah? This could be, for example, the likes of Tabung Haji, the likes of PNB, as well as also even the development financial institutions. So these are possibilities that we are looking at, right? I understand the fact is that if the depositor has only one deposit account, then where do they go to, see, right? Of course, the current approach is that they would have to re-establish another bank account for these payments to go through at this current juncture. But we are looking at these other possible payment channels, right, where we can put the money towards, right? But of course, we are also quite happy to hear also, if there are ideas, for us to explore. Thank you very much, Ridzuan.
Thank you, Mr. Lim. I think that's a great opportunity for the industry to actually discuss and think about, because it is a real need, and hopefully, touch wood, there's no failure of any banks. But if it does happen, then this is something serious that we need to address, because money needs to be channeled somewhere, and if there's only one bank account, then that would be an issue, and it would disrupt not just individual but also some businesses as well, because having one bank account is really not really a good succession plan. Encik Nadzri, Encik Nizam, I want to ask MDV about the change that we've seen in terms of how PIDM seems to be rapidly changing your mindset from what you were before, as you said, in 2013, 2014, and now you are partnering aggressively with private sector. And perhaps share with us as well in terms of what are some of the key focus that you see pattern in terms of the company that you are financing now in the current situation.
Right, thank you again, Ridzuan, for the questions. For MDV, essentially, like I mentioned, I think for about 4 or 5 years back, as when we started attending the startup conferences, basically, looking to, even on our part, to future-proof MDV's MDV's business model going forward. When I think we get these conferences were essentially standing room only. I think the one that I attended in Penang, the ballroom was filled with founders or potential founders essentially, and this essentially continued on. And then internally, I think when we looked at ourselves and we looked at the technology trends, there's the no code or low code systems or platforms that are ongoing. Essentially, the project or contract financing that we provide for system integrators or project managers will not be of much use to this new generation of companies. Together with the disruption in technology, disruption in business models. So we expect then that the number of startups will grow, and these are the ones that will require financial support from agencies as MDV. So that entailed our pivot towards venture debt part. So essentially given the demand. So for MDV, essentially, whilst we changed the lending direction, we were required to change also our infrastructure, how we approach the companies. Previously, essentially MDV's business development team would be attending the ministries or corporates or GLC's tender briefings. And that's where we would generally net all the system integrators that's bidding for the large contracts that we're looking at. But when we were looking at venture, that required a significant change from both the business development team and my credit team. The credit team in MDV, I think as we found out in the past that, I do need my credit team to be a bit skeptical. Sorry, I mean, a healthy skepticism to be displayed on their team. And on the venture debt team, which is a totally separate team, entirely separate background, essentially they see glass as half full rather than the other portion. But having said that, we do give it is still a credit facility. But so changing the infrastructure, changing the team, and third, the most important part is changing the product itself. For MDV, generally we would be, when we lend against the project cash flow, that's essentially, taking the risk almost of a venture capital company. And if it's successful, we get returns of between 2 to 3%, which is entirely unsustainable if you to look at it from an organizational perspective. MDV would need an extremely large portfolio to cover the possible impairment loss and to take care of the impairment charges for the existing current portfolio. So products, it is still in, but what you see if you were to meet with my venture debt team and get the letter offer, it is a hybrid between a term sheet of a VC and a letter offer from a bank. So the venture debt essentially includes some of the key terms, and the key part that allows us to manage risk to ensure that this is a sustainable program, that we are able to offer this continuously going forward, is the warrant feature. Essentially allows us, yes, the warrants is free, but if we were to exercise, we would pay the subscription price to the company to receive the new shares. So these are some of the transformation. But in terms of the digital transformation for MDV, essentially, again, this this would be quite crucial, not just digitization, but more a digital transformation. We're looking at pockets of technology rather than an end-to-end, straight-through processing kind of deal that is quite not feasible for the way we work. Perhaps we're looking at separate CRM, KYC, credit scoring systems, loan management system, loan origination system, for example. But we were looking at this, but the main idea, I think, for the fintech players that are out there that's either at the core banking systems, is that as a business, we do need to have a proper matching between internally also for our cash flows. We cannot invest millions in a system where MDV is on a transactional basis. If there are projects or there are no contracts, if the overarching economy is not as robust, then basically we will be receiving lower volumes. But I cannot stir the payments for the systems. to be amortized over the period of same amount of year. I do need to match it to my transactions basis. So having that would be extremely useful for MDV. Having said that, a digital AI based on machine learning, based on our experience, would definitely help, because essentially my threshold currently, I can't do anything below 1 million because it would just cost too much. But with a program, a lending credit program rather, then basically I would be able to lower the cost and issue, from our perspective, a more micro lending program that would basically benefit more startups rather than the ones that we are going through. Sorry, I do hope I've answered your question.
Yeah. I think that's clear in terms of what you have done with MDV in terms of trying to change the mindset and really try to understand the dynamics between how to actually give a term loan and something that is more short-term and smaller in amount, and also looking at the cost of doing so. So I think that's really important in terms of not just looking at it from a plain vanilla, I want to digitize, I want to change mindset. This is really a smart way in terms of looking at how you want to innovate the entity itself. And having said that, back to PIDM, you mentioned just now there's three core areas in terms of resolution, risk assessment, and governance that you are looking at in terms of in managing and looking for technological solution. Perhaps could you share, Mr. Lim, further in terms of what are some of the technological solution that PIDM is considering, either in the short term or in the medium term, in making sure that the reimbursement to the destination is secure, seamless, and better going forward using technology.
Yes, Ridzuan, thank you. I think very important when it comes to our seamless reimbursement approach to ensure that this is effective. What we are looking at is that ability to seamlessly provide the insured depositors, the insured deposits back to the insured depositors in a fashion where they don't need to interact too much with us, that it is automatic and hassle-free, right? That is the ultimate goal that we have. And of course, very much to do this in a prompt fashion, right? I mean, nobody wants to not be able to receive their money or access to their money, over a very long period, especially, in stress environment. So what we are looking at is that, the solutions that would allow us to be able to put money to the depositors, having to overcome the issue about where do we put this money to, right? And like I shared earlier in my earlier presentation, one of the solutions that we are looking at currently is the Do It Now ID proxy, right? And this is has come through very nicely for us, by knowing just the ID number of the insured depositors that we can obtain, from the institution's records, right? We are able to put these funds into their accounts by just knowing their ID. So yeah, that's a very good solution for us. Now, we are also looking at other possibilities, as we move forward, if there's any other ways, to this technological issue that we have, that we don't have this alternative bank account to put the money to, right? Now, I think another key area that I spoke about, and I think, areas that we wanted to, explore further, is in relation to eKYC, right? And typically in banks, where the customer is new, it's a new relationship, and a physical appearing at a branch to verify the person and so happens, right? But especially with COVID environment, where there's MCO and all that, and also to provide convenience to depositors, how can we do this on an online fashion, on a remote fashion? And I think this is where we are looking at the eKYC solution, right? Which there's a lot of rules and regulations that the central bank has already provided for in this space, and we see that this is definitely an area that we want to explore, and we're looking at possible options in these areas, right? So these are some of the areas that we are looking at this point in time, and we are quite happy to explore this further with the industry. Thank you.
Thank you, Mr. Lim. I think that's really nicely explained, and segue into MDV, talking about. So you talk about just now project financing, Nizam, and I really want to just put it there in terms of, say for example, there's a company that wants to develop something for PIDM in terms of, say for example, a blockchain, for example, or anything that would facilitate the seamless experience of when payment is made, and this require maybe R&D kind of a facility, and the project would only start to generate revenue, for example, in the next 2 to 3 years. So is this something that is possible for consideration by MDV? Either a single entity or a consortium of entity, including higher learning institution, can come together and approach MDV in terms of getting some sort like a support financially from you.
Thanks, Ridzuan. Actually, that is our bread and butter. We've been doing that since 2002. But again, it depends. Essentially, if it's just for a proof of concept, without, I think as you mentioned, if there is without any possible revenues coming in, then perhaps other platforms would be, other types of financing would be required. But if it is basically an overall contract, the development works, takes over certain milestones, and payment will be coming in to certain milestone, then that's basically what we've done, and we will be doing, I guess, at least in the medium term. Say, for example, some of the e-government infrastructure that I touched upon. These are massive systems for some of the agencies, some involving between 10 to 15,000 PTKs, pegawai tanggung jawab, I think, that they call. So basically, it is between the system development request between 16 to 18 months, essentially, and payments will be coming up into the milestone at the design stage, when phase 1, phase 2, and so forth. So that's essentially what we have been financing all this while. So that is what we do. But in terms of assessment, I know it may seem a bit too good to be true, but essentially what we do is we would look essentially at a team in terms of their experience, the capabilities, the project timelines, basically look at the execution risk. Will they be able to meet milestone 1, milestone 2, and will we be getting the payments, essentially? So that's, there is a contract with an agency such as PIDM to develop the system. Yes, that is something that we can finance. In addition to looking at the company itself, when you develop a particular project, I mean, you're not in it alone. For that particular agency that I looked for, this is a generation 2 system. So essentially, the big names were there, Accenture were there, and the various other systems or network or hardware provider was there. That provides additional assurance in terms of the support that the primary vendor is getting. So for us, that is something we have done and will continue to do.
Thank you very much, Nizam. I think it is important for the fintech company to also take note that it is not about developing whatever solution or innovation alone, but it is important to collaborate with us, especially those with proven experience, because the magnitude of some of the project may not be seen to be able to be just handled by a single company, especially a new company, has no credential or experience. But there's an opportunity always for the startup company or for new company or new initiative to work together with others. So I think this is one of the area where a lot of companies are not able to identify opportunities in that manner, in that structure. And I hope that this session would give them some new perspective about how to work together with others. I just want to follow up with PIDM, talking about when you talk just now about eKYC. Okay, I think there's a little bit more that I think people need to understand. eKYC with the bank or with the financial institution is one thing, because it's a B2C relationship. People come to the bank and then they get identified by the bank. But in PIDM case, this is not the flow of event. We depositors never actually go to PIDM and talk to PIDM. So how do you envision the eKYC process that you want to use? Is it that you are taking it from the banks, or do you want to develop your own? Because as you know, the eKYC process is not standard yet in Malaysia. So how do you I mean, share with us how do you think that is going to be done?
Yes, Ridzuan, thank you. Yes, the eKYC element comes in, because there will be instances where the insured depositors would have to interact with microsite, right? They may choose a payment approach which is not do it now, for example, right? Because they may not have a ID proxy registered under do it now, right? And they may choose, for example, to be paid via, let's say, another bank account that they have, for example, right? Now, the eKYC comes in here because we need to verify who this person is, right? And we want to do this remotely, right? It is just impossible for us to set up branches and so on, because when we do this business, it is going to be very exigent situations, right? The crises don't happen every single day, right? It is on exigent circumstance, and a lot of things has to be done, as much as we can on a remote fashion to reduce, the movements of people and so on, right? So this is where we see that they have to log into our website, our microsite, and go through a e-verification process, right? So that's one key area in terms of eKYC. There's also another area that we're also looking at in terms of verification of documents. I've alluded to earlier. Some of these documents are documents that they have to upload into our microsite. Such, these could be, for example, death certificates. It could be letter of probate, letter of authority, and so on. So these are things that we want to also be able to remotely verify the authenticity of these documents, right? Whether it's a channel to certain official databases or register. And if this can be done on a remote basis, that will create a much more seamless approach for taking our reimbursement. Thank you.
All right, I think that's quite interesting in terms of understanding the perspective of the eKYC that PIDM want to actually install for these purposes, because it's slightly different from how typically a bank or any financial institution approach it. But this is on an urgent basis under a crisis situation, and perhaps a different kind of ID that will be used as well. So that's why it is interesting to know and give the perspective to the industry about what are the potential innovation that could be created for these purposes. So we do not have too much time or anymore. We have about 2 more minutes left. So I just want to ask both of you, starting with Nizam, what's the aspiration for the next 12 to 8 months for MDV? Then later we'll ask the same for Mr. Lim as well.
Sorry, for us, I think for MDV, what we are, future role, especially for fintech, basically we're looking at financing these companies using our venture debt in combination with what we currently have, venture capital equity financiers. Sorry, I may have missed this out. I think when I was explaining venture debt, currently for the existing government programs, we do not require this. But going forward, the key part that helps make this a success is the presence of corporate investors or VCs in there. Unlike VCs, I think an account manager, so to speak, or investment manager will be looking at multiple accounts, essentially. So we do have to place reliance on other stakeholders to ensure essentially that the company stays on its true north. Secondly, I think what we're looking at is to utilize digital platforms. I think we are talking to a few of the digital exchanges when we're looking at IEOs. There are a number of ways that we can work with these. One is that fundraising proper, basically to develop a closed-end fund or a SPAC, perhaps. Again, use our credit standing to lend to startup companies, to look at P2P, ECF platforms, both to raise and to participate in companies entering there. The other possibility is that joint venture with fintech startups to offer digital financing. We were talking to some of the platforms essentially for them to undertake proprietary trading or lending, for example. We're looking at, given that our discussions with the digital asset exchanges, new investment assets, tokens, or venture funds to investors to deepen the funding opportunities for fintech. Again, mobilizing funds for the startup sector. But we would like to work with the relevant entities or institutions to combine our financing experience with the domain expertise and development focus to develop some financing program again that would benefit startups. So again, this is not necessarily in the next 12 months. I would really be stressing out my corporate finance and corporate planning team to do this. But these are some of the plans that we have. Again, not necessarily to move fast, but to move in a deliberate but decisive manner into these new areas. Thank you.
Thank you, Nizam. I think that's really, really important for the industry to know. Over to you, Mr.
Thank you, Ridzuan. I think our aspiration at the end of the day is that we want to work very closely with our technology partners, and we see technology as an area that we need to embrace very closely and follow its development. Because technology is probably going to be the way to go for us to make our processes and also achieving our mandate on our function in a more effective and also efficient manner. So we look forward to work very closely with with fintech, the group, and also with technology partners. Thank you so much.
Thank you, both of you, for very insightful sharing today on this bright Sunday morning, and thank you the participants for your attendance today. I hope that you've seen a fresh perspective in terms of how these government agencies are really looking forward in terms of helping us in the fintech industry. And please contact me, the association, in terms of getting further details, in terms of if you're interested to know more. We are more than happy to connect you with not just MDV and PIDM, but many other stakeholders as well. Thank you very much for your time, and hope that you've taken a good information from us today, and hope you enjoy the rest of your Sunday.